Ticker symbol QDTE, or the Innovation 100 one day till expiration covered call strategy ETF, has recently been one of the most popular income-focused, income-generating ETFs across the entire community. Now, this is because this round till ETF, at least so far since inception, has had a distribution rate of around 67%, but on top of that has offered investors a total return which is positive, at least so far since inception. But one of the main questions a lot of more income-focused investors might have is how much income can an ETF like this one, QDTE, actually produce for them with different amounts of money invested. So in this video specifically, we're going to go through this ETF, explain exactly what it is and how it works for those of you that aren't really familiar with it. But on top of that, I'm going to share with you exactly how much an investor would potentially need to invest into QDTE, this ETF, in order to earn amounts of, say, $10 per month, $20 per month, up to $10,000 per month of income. Now, spoiler alert, it's a lot less money invested than you probably think, so you're going to want to stick around to the end. So like I said, if you're an income-focused investor interested in some alternative income-generating strategies, make sure to drop a like down below, subscribe, and let's get right into this one. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, before we go through all the income generating tactics and how much money an investor would need invested to generate different amounts of income, let's first go over some of the basics. First of all, we're right here on roundhillinvestments.com, which is the provider of this ETF. Now, it says right here, QDTE utilizes a synthetic cover call strategy that seeks to provide current income on a weekly basis while also providing exposure to the price return of the Innovation 100 index. Now, that right there is pretty interesting. Obviously, most of us as dividend income focused investors are used to getting paid dividends or distributions on a monthly basis, of course, if not quarterly. But this ETF, along with some of the newer ETFs out there, are actually paying investors every single week, which is insane, especially for someone like me that wants to use my dividends in the future to basically pay for things like expenses or all my life expenses really. ETFs like these ones could potentially be very handy. Now, it says right here in overview, the Round Till Innovation 100 ODTE Covered Call Strategy ETF, or QDTE, is one of the first ETFs to utilize 0 days to expiry, or ODTE, options on an innovation index, the Innovation 100 index that is, as defined in the fund's prospectus. QDTE seeks to provide overnight exposure to the Innovation 100 index and generate income each morning by selling out of the money ODTE calls on the index. ODTE is of actively managed ETF, obviously. So obviously the cover call strategy, or the synthetic cover call strategy, is a strategy that investors like myself and of course fund advisors have been using for a long time now. Nothing new there, but some of these newer income focused ETFs are getting a little bit crazy, considering they're now trying to basically farm as much income as possible by utilizing overnight expirations. Now, it then says on the website why QDTE. It says weekly distributions, which of course is a positive, especially if you're someone like me looking to use your dividends or distributions to pay for expenses in the future. And it says QDTE seeks to pay weekly distributions out of sold option premiums. Income potential, QDTE seeks to generate income through a covered call strategy on the Innovation 100 index and harness volatility. QDTE sells one day till expiration options on the Innovation 100 index and seeks to exploit structural market misplacings. So this so far seems like an awesome strategy, especially if you're sort of someone that's dabbled with options or covered call strategies in the past. And like I said earlier in the intro, this ETF is becoming more and more popular, to the tune of around 272 million in AUM, and considering this ETF has only been around since around March, this is a very popular actively managed fund. Now, just to get this out of the way, the expense ratio, yes, it is very expensive at 0.95%, but for most of us dividend income focused investors that are interested in some of these alternative investment opportunities, I think we're getting pretty used to around paying 1% more or less of expense ratio. Now, to get to some of the good parts, the distribution rate, like I said earlier, is 67.4%, at least as of filming this video, which means this ETF has distributed a lot of distributions at least since inception. Now remember, this ETF pays every single week, so it's going to get kind of confusing because you're looking at these numbers and you're saying, wow, that's a pretty decent distribution. But remember, this is on a weekly basis. This is not 36 cents monthly, which still would be decent. This is 36 cents weekly, 33 cents weekly. This is 9 cents, 26 cents, 33 cents, 25 cents, 31 cents. Now, just as you see right here, the distributions are going to change due to things like volatility and of course an option premium, but overall this ETF is paid anywhere from down as low as 9 cents on a weekly basis up to what I can see as high as around 57 cents, which is back in July. So anywhere from around 9 cents to 56 cents, even if you were to average it out around 30 cents per share per week, that is honestly still insane. Now, one of the main things a lot of critics and investors have when it comes to these ultra high yielders, and me being included in that, is that the NAV decay is going to take place, meaning that the actual price of the investment is going to go down over time, even if it's yielding a massive amount. Who really wants to hold on to an investment that's going to continue to drop in price? And for QDTE, at least since inception, just going off of what we know now, over the last nearly 1.5 years, this ETF started at around $46 per share and now is around $43 per share. So it has dropped a little bit in price, but obviously with those massive distributions, I don't think anyone is complaining. Now we're talking around 17% annualized gain, and this is with $10,000 and reinvesting those dividends along the way. Or if you were to have invested in QDTE and not reinvest the dividends, you're still looking at an annualized gain of around 15.92%. So this one checks out as far as having a positive total return. Obviously, if this ETF had a negative total return of 20% as of right now, I honestly probably wouldn't even make this video. But at least so far, 0.46 years in at least, this ETF has a positive total return, has paid massive distributions, has a little bit of NAV decay, but let's go on. Now, to figure out how many shares to how much money investors would have to invest into QDTE in order to reach different milestones as far as weekly and monthly dividend income, it's kind of hard to know exactly what this ETF is going to pay ongoingly, but just to average things out, let's just say on average, QDTE pays investors, even on the low end, 30 cents per share per week. So that means an investor would receive somewhere around $1.20 per month, again, if we're just going off the average of 30 cents per share per week. So that means that if an investor wanted to earn $10 per month on average from QDTE, they would have to buy only 8 shares of this one, which again, $10 is not by any means enough money to retire off of or anything, but just as a start, for an investor to want to receive around $10 per month consistently-ish, they would need to buy around 8.3 shares of this one, or spend somewhere of around $350 in order to earn $10 per month in distributions. Now, if an investor wanted to up things a little bit and wanted to earn, let's say, $100 per month on average from QDTE, just based off of the previous distributions, an investor would need to potentially buy around 83 shares of this one, which of course would cost them somewhere around $3,500. So $3,500 invested, and you're receiving around $100 per month in distributions. And again, these are all just estimated numbers. Things could change. This could be way higher, way lower due to things like volatility, etc. But still, $3,500 invested for around $100 per month in distributions. But let's say an investor out there wants this ETF to pay their rent. Let's say their rent is $1,000 per month and they don't want to have to go to work anymore to pay for their rent. Let's say they wanted QDTE's weekly distributions to pay for their rent consistently. That means that in theory, an investor would have to purchase around 833 shares of this one, which again is currently trading around $42 per share. So an investor in theory would pay around $35,000 into QDTE and have this ETF cover their rent with the weekly and monthly distributions. Now, just to get crazy, just for fun, let's say an investor wanted to earn $10,000 on a monthly basis on average from QDTE. That means an investor would have to purchase around 8,333 shares of this ETF, which might sound like a lot of shares, which it is, of course, but still, considering this ETF costs around $42 per share as of right now, an investor would only need to purchase around $350,000 in order to have a quote-unquote consistent $10,000 coming to their account every single month consistently. Now again, take all these numbers with a grain of salt. As we can see here, the distributions have been sort of all over the place at times. Sometimes they've been much higher, sometimes they've been much lower, which is why for me specifically, I would always utilize funds like these as sort of a side quest in my portfolio. I never personally would feel comfortable putting all my eggs in one basket and utilizing an ETF like this to try to pay for things like my bills or expenses, if of course I needed to. But regardless, I do think that some of these alternative investments could offer some big, good potential income. But again, we're going to have to see how things play out, considering ETFs like these ones are relatively new. So now that we've talked about QDTE, the Innovation 100 one-day till expiration covered call strategy ETF, we shared a little bit about how this ETF works and how it pays so much in distributions, at least it has historically, to investors. I lastly want to hear from you guys down below. Do you currently own any shares of this one? And if so, how many shares do you have as of right now? Let us know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.